Key concepts: currency, quotation, spread. On forex market, one currency is traded against another. In other words, for one currency unit, a certain number of another currency units is offered. There are numerous types of currencies on forex market. That is why each currency has its own abbreviation, which consists of 3 Latin letters. The first 2 symbols determine the country of a currency. The third symbol is the first letter of the currency name. For example, in the abbreviation GPY, the first signs identify the country, Japan, and the third one defines the currency, the yen. Suppose we are dealing with the US dollar and the euro. In order to estimate the value of the currencies, we need to appraise the value of the US dollar expressed in euro and vice versa, the value of the euro in the US dollars. Thus, it is necessary to know the exchange rate of one currency against another. Such currency rate is shown in the quotation XY. When we say that the quotation XY is equal to Z, we mean that one unit of base currency X can be bought or sold for Z units of the quoted currency Y. Apart from quotations, it is necessary to understand the changes of quotations. There are 2 forms of quotations, the direct quote and indirect quote. For the direct quotation against the US dollar, the quotation advance indicates the appreciation of the base currency and cheapening of the quoted one. For the indirect quotation against the US dollar, the quotation increase means the US dollar upturn and the base currency cheapening. It is very important to distinguish the types of quotations against the currency on forex market. Making a deal, a trader has to know both the currency pair and the price of this pair. On the exchange market, the price of the currency pair is denoted by 2 symbols, ask and bid. Ask price is the highest price in the quotation of a currency pair, at which the trader buys the currency, which is the second in the abbreviation of the currency pair. Bid price is the lowest price in the quotation of a currency pair, at which the trader sells the currency, which is the first in the abbreviation of the currency pair. The difference between the ask price and bid price is called spread. Spread is a payment for the opportunity to trade on forex market. This is so-called commission of a brokerage company. Therefore, bid rate, ask rate and the spread size are the key concepts which you should know in order to operate on forex market. A trader must clearly comprehend the notion of each concept, since on forex market the decisions have to be taken quickly. That is why a trader should not have problems in comprehending the fundamental concepts.